Okay? Good. Okay, good morning. Welcome. Any apologies?
Yes, Chair. Apologies from Councillor Dack.
Right. Do we know what the circumstances are there? We haven't had anybody from... She
was only nominated recently. She came to the last meeting, but I was informed at the time that she was nominated that she would be added. She wouldn't be able to come to this particular meeting. She already had prior commitments.
Okay. But she's in place and she will come to future.
Yes.
Well, that's good. That's good. And we have a new member. Would you like to introduce yourself?
I'm Paul Schofield. I should be one of the independent members going forward.
You're very welcome, Paul. Thank you. Okay. Are there any urgent items or announcements? No. Items to be considered in the absence of public and press. Are there any? No. This is a quick agenda. Declarations of interest, pecuniary and non-pecuniary by members. None shown. Okay. Reports from and questions by members. Nil. Questions from members of the public. None such. Minutes and actions of the previous meeting held on the 25th of January. Can we approve them as a true record? Yeah. Right. Yes, Chair. Any matters arising? Nope. Okay, and we move on to item 8. 21.2 accounts, external audit update, and we have Hassan present.
Thank you, Chair. Let's also have Sue Gill, who's the engagement manager on the audit. So I'll take you through we've got two reports, one for the combined authority and one for the PTE. So it summarises the findings from our audit. So in terms of the combined authority, first of all, take you through the executive summary. So on your page 30 of the pack, it outlines the status of the audit. So when this report was written, there was a few areas which were where we were waiting for information in order to complete the testing. So on the first of those, we've completed our testing on the remaining testing on the payroll in terms of starters and leavers testing. On the investments, at the time of writing, we were awaiting confirmation for 4 cases. That's now down to 2 cases where we're waiting for confirmation from the other parties. Although on one of the confirmations which we've received, there is a difference from what has been reported. So we're just querying that particular item. We've received the information from the pension funds actuary, so that's now with our specialist to review that the information which has been provided. And we've on the grant income, we've completed the testing of the in respect of remaining testing that was outstanding in respect of grant income. So that's a current status in terms of those items which were listed on at the time of writing the report. Moving on to page subject to the completion of that testing, we're anticipating issuing an unqualified opinion, and in respect of our value for money responsibilities as summarised on your page 31. We have no issues identified in terms where we need to be reporting any significant weaknesses, so we won't be making any reports by exception, which is a good position to be in. We highlight on page 32, bringing to your attention differences that were identified during the audit, and Sue will go into a little bit more detail in terms of those particular items in a short while. And also on page 33, we highlight that there was a controller issue which we've identified during the during the course of our testing. Our audit isn't designed to identify all make an assessment on internal controls. It's just where we identify issues, we bring those to your attention. The work of internal audit is your primary source on assurances on the controls that are in place at the authority. Section 2 of the report, we provide a summary in terms of the risks that were outlined in our audit plan, so highlighting what the risks are, what the procedures are that we undertook, and the conclusions that we reached in based on our work. For each of the risks that were identified. So on page 35, the risk of fraud in revenue recognition. Page 36, the risk of material misstatement caused by fraud or error, and we haven't identified any kind of issues to bring to your attention. On page 37, we had 2 areas of focus which are highlighted there in relation to the valuation of land and buildings and the pensions the pensions accounting in terms of your IS 19 reporting. For the PPE, we haven't identified any kind of issues to bring to your attention in respect to those, but we need to just point out that, as I said, the testing on pensions is yet to be completed. Although we've received the information back from the actuary, we just need our specialist to consider that the information which has been received. I'm not anticipating any issues arising from that, but it's just worth noting that that hasn't yet been completed. And on page 38, we highlighted the areas of focus in terms of going concern and the accounting for COVID grants, and haven't got any issues to bring to the committee's attention in respect of those 2 areas. Section 3 will provide a copy of the audit opinion, which we'll be issuing nearer to the time that we're going to be issuing that opinion. As I've said, we're anticipating it being an unqualified opinion. I'll hand over to Sue just to briefly take you through the 2 differences which are outlined on your page 42.
Right, let me find page. So we're looking at the page 32. Yeah. Okay. 42, isn't it? Well, it's yes, it's also referred to in the executive summary on 42, but you're right, 42 is more detailed. Yeah, the first one is to do with where the pension fund. This is not something that reflects at all on your finance staff, but what happens is, of course, you have a large number, relatively speaking, to do with valuation of the pension fund, which is audited separately, and you have, as an authority for both the MCA and the PTE, a share of the pension fund assets. It so happens, and this is quite often the case, that when the audit of the pension fund was completed, they had come up with, over the value of the pension fund as a whole, that the assets were undervalued between the draft and the final version by that 32 million. So the MCA share of it was just over 200,000 off the top of my head, because we haven't got onto the PTE one yet, a similar amount for the PTE. So because it is, strictly speaking, an uncorrected misstatement, we need to report it to you. If it was above materiality, you would need to actually correct it, which I think you have done in previous years. In this, it's a technical issue that, as I say, doesn't reflect on anybody. But because it's above the reporting level at which we need to tell you about it, we need to tell you about it. So that's all it is. And when we do the final letter of representation that we do at the very last stage of the audit, we will simply have that in as a specific representation as part of our procedural processes, and you respond to that. But it is technical. It's not something that reflects on the finance department at all. It's just, in technical terms, one of those things. Does anybody need any more explanation of that? We get the same issue cropping up on the PTE for exactly the same reason, of course, because both PTE and MCA are members of the same pension scheme. Right, okay. And the other one was misstatements of £375,000 on the valuation of assets. This was something that simply fell out of our testing when we checked it, and we found that there was a difference which your finance team have agreed to amend for. I'm just seeing if I can find exactly which asset we were talking about.
If I can help you too, it's the car park at the Advanced Manufacturing Park Technology Centre.
Ah, right, yes. Yeah. And you were content with that, weren't you, with that finding?
Yes, we were. Yeah.
So that's a very low level of misstatement in your accounts as a whole. That's all that I think we need to draw to your attention. But did you have any other queries arising from the full report?
Okay, thank you very much for that. A comment to start with, as I think as I commented last time, it's comforting that you reaching a clear VFM conclusion. You're anticipating an unqualified audit opinion, and there are few errors found. So that's a thank you and well done to officers. That's just a comment, and then a couple of questions. Firstly, in the PTE report on page 68, you've got accounting for infrastructure assets marked down as an outstanding area. Now, this has been a problem that local authorities have been grappling with for about 3 years, and you won't resolve this year here. But can we take it that that's not actually going to explode into a major problem that will cause delays? And linked to that question, when do we think we're going to get the audit opinion for this year? And given that it's so much later than we would have hoped, what is the impact on the audit for next year?
Yeah, so on the haven't actually got to the PTE report yet, but happy to take that question now, because as Sue said, there aren't any additional issues really to bring to your attention on the PTE report. On infrastructure assets, so the DLUC issued guidance just before Christmas, well, just before December, which came into force on Christmas, and subsequent to that, SIPFA issued guidance by way of a code amendment, which authorities could apply. So it's a solution which is in place for the next 3 years, and what it means is that by applying that override, you will need to make just a additional disclosure within the financial statements to say that you're applying the override, and this is the impact of that. I've shared with officers an example of the disclosure, which I believe is going to be made. So it's not going to have an issue for this year's accounts or the next year's financial statements. What it will mean is that if the override just remains as being a temporary override, then you'll need to make sure you've got the information available, so that when it comes to accounting for it in the future, where infrastructure assets are replaced, and you then need to make sure you've got the information in order to de-recognise any show the de-recognition within your accounts for the replaced part of the infrastructure asset, and also the accumulated depreciation for that. But I think for the next for this year and the following year, just by applying the override gives a temporary solution to that. And I'm not sure what will happen going forwards as to whether that the override that's currently into place, there's potentially there may be further guidance coming along further down the stream in terms of how that should be accounted for. And we anticipate being able to issue the opinion. I understand that the accounts need to be approved by the full board and the board meetings in June, so we'll be issuing the opinion after the board meeting.
And the impact on 22-23?
22-23, so there are a number of audits which have yet to be completed. We're going to be aiming to start this the 22-23 audit in towards either the back end of this calendar year or the beginning of 2024. And I'll need to, had a meeting with officers where I said I'll be coming back to them with a firmer timetable in terms of when that exactly will be undertaken.
So very late then?
It will be late, yes.
It's not good enough. What can you do to try and improve that?
There are, I think, as I've kind of mentioned to the committee and as we've reported more widely, there are capacity issues which are impacting the public sector external audit market as a whole, and in terms of delivering the audit for 22-23, we'll need to we'll need to look to see when that can be when that can be resourced. Understand members' frustrations in terms of the timings of that, but the delivery of the audit will need to be scheduled for when it can be resourced to be delivered.
So do we get a fee reduction for being late then?
No, you don't get a fee reduction for being late, because the fee for
you being late?
The fee for the audit is the fee for the audit. I think, as also mentioned to members in at previous committees, and is also highlighted within our report, we do not. We've highlighted that there are a number of issues in terms of the scale fee, which has been set for local government bodies. We as a firm have communicated out some of the issues associated with the regulatory changes, the impacts on audit fees, and also where additional work is required, then we'll be looking to seek the costs associated with undertaking that additional work.
If I could comment on 2 points, please, Chair. So I think if I take the first one, which is the sign-off, excuse me, of the 21-22 accounts, what I would propose to committee members for decision today would be subject to any further questions from members of the committee. If they are satisfied with the status of the audit and the findings, and therefore the overall opinion that Hassan would be minded to give, subject to the completion of the outstanding procedures, that they today endorse the 21-22 accounts for submission to the MCA board in June. The board is effectively those charged with governance who can approve the accounts, and that will be the next available opportunity to get the accounts submitted, and then we can draw a line under 21-22. We are, as Hassan's alluded to, we are intending to apply the temporary override which DLUC and CIPFA have made to the code on infrastructure assets. That is a presentational change. It has no impact on the results of the MCA group. It is simply a change on the balance sheet and fixed assets, net nil impact. And so what I would propose is that the committee could give delegated authority to Gareth in consultation with you, Councillor Lofts, to make the amendment to the accounts, and you can satisfy yourself that they are as you'd expect, and then we'll submit them to the board in June. My second point was around 22-23 audit. Hassan mentioned that there was a risk that the audit for 22-23 may be delayed when we talked about the infrastructure assets offline on Monday. And reflecting on it, there are pros and cons to it. One of my major concerns, obviously, is that as ever, it's much better from a resource planning point of view to plan well in advance when we need to schedule things. And so having that certainty as soon as possible, regardless of when it may start and end, is more valuable to me than being told it's going to be a while off. Now, the thing that we've all got to have at the back of our minds is that after EY finishes the 22-23 audit, and let's say it did start in November, for instance, and lasted, let's say, three months, that would clash with the point at which I suspect KPMG would want to come in and do an interim audit. So it's going to put an awful lot of pressure back onto the team in Q4 again, which is what we've experienced this year. So, I mean, if there was any possibility of bringing it forward, I would like to do so, and also mindful of the fact that the statutory deadline for publishing the accounts is the 30th of November. I'd hate to have to miss that deadline again if it was at all avoidable.
Mike, if I may just add to this, we know that in Q4 of the next financial year we've got some enormous change heading our way with the return of the tram system to local authority control, public control. So the potential of having two audits running concurrently whilst managing a generational change is really quite daunting.
Sorry. Yeah, Hassan, do you have a view on that, on bringing things in on time?
I think I've already outlined in terms of that we'll be looking to undertake the audit when we can ensure that there's a team in place to resource the delivery of it. I understand some of the points that have been made in terms of the operational challenges that you're facing, but given the where the MCA and the PT fit within our wider portfolio, I can't guarantee that we'll be able to bring the audit at a time earlier in terms of being able to meet some of those issues. So, as I said, it's be looking to I expect it's going to be towards the earliest. It's going to be towards the end of this calendar year, and it will or potentially the beginning of 2024. And I do hear and I do understand some of the points that you're making in terms of the operational issues that you're gonna that might pose to yourselves.
Yeah, can I say it's just deeply unsatisfactory. It's like taking your car into the garage and them telling you that they might give you a price, but they might charge you far more than that, and they might do it when you want them to do it, or it might be a month's time, and you've just got to live with it. It's I mean, it may be nothing you can do about it, but it's very, very poor from a client perspective.
And if I were doing this as a one-off contract with you, and I was staying with you in the future, I would be embedding penalty clauses for late delivery with you, which is what we do with clients and customers in other areas. But the trouble is that, it's an audit firm, and I'm one of the top 6. You think you can get away with this and just brush it off, and it's just not good enough.
And from my observation, it's something which affects all audit firms currently working with local authorities. But I think this is a degree worse than the others I've come across.
Can I just add to that? It seems to me that with the key changes that we're going to face in the first quarter of the following year, we're almost setting ourselves up for failure here. We're all recognising that this is not going to work. Now, I appreciate the problems which your firm may have, but with all the resources of E&Y, can we not get a small team together to do this work in the timescale that we need it to be done?
We need it to be done. We don't
Absolutely. So, how much resource do we need for this audit, please, in terms of number of people?
The audit for each of the entities is approximately 1,500 hours each in order to complete the audits of 1,500 to 1,600, 1,500 to 1,800 hours each to complete those audits. And as I've already outlined, that there are capacity issues which are kind of impacting public sector audit delivery as a whole. And I think, as members have mentioned, it's an issue which is kind of impacting on EY, and it's an issue which is impacting on all of the other providers of external audits to local government bodies. So it is a sector issue. In terms of what we're reporting here is the delivery of the audits for the delivery of the 21-22 audit. There are across the board, I think if you look at what the PSA has published, there are a number of 2021 audits which have yet to be delivered across the sector. So there's work which is ongoing on the audits of 2021, 21-22, and also now as we're moving into 22-23. As I said, I understand the points that are being made in terms of when we can come in to look to resource the audit. We need to do that considering the portfolio of audits as a whole, and where the audit of the PG and combined sits within that portfolio as a whole, as well as the capacity issues. There have been issues at not necessarily at yourselves, but there have been issues at a number of other organisations in terms of the complexity of issues that are arising, issues such as infrastructure assets, issues such as accounting for pensions, which always have had a knock-on impact in terms of the audit delivery. As I said, that's the position that we're in, and we'll be looking to deliver the audit when we can deliver the audit.
And thank you for that. And I recognise the problems you've got with the sector overall, but it seems to me that no other or few other local authorities will be facing the sort of problems which the MCA will have in January 24 in terms of the degree of change. And it seems to me that we need to pull together a team of about 4 to 6 people for 3 months to discharge the work. And I find it difficult to believe that in a large organisation as yours, that given the will, we cannot resource that team and given the priorities that there are on this particular job. And that's that. I leave it there and say we need a process review, see how it can work, but it's got to be taken back to your firm to provide the resource for this that we need in the time required.
Yeah.
Well, Chair, I've got a question.
Sorry.
One question is, who's, in the end, who calls the shots here? Is it the audit firm, or is it us in terms of, because you don't expect a negotiation on these things, but we're saying we've got special reasons now, and you're listening to the special reasons, but you're not giving an indication that you're going to prioritise us for special reasons. And my question would be, well, who are you prioritising then? Because it's, in the end, it's your choice, you're telling us, and you're saying it's not making much difference. You're hearing what we're saying, but it's not making any difference, is my impression. So reassure me I've got a wrong impression, and give me some idea about what it is where your preferences lie. I mean, is it other audits for other people? Are we in a queue? Is it fee income? Is it keeping other clients happy? What is it? What's the problem?
Well, let me try and follow up with that. What you've said is it's going to need about 40 man weeks work. I've averaged 40 hours for a man. So what incentivises you to do this for us? Is it an increase in fee level? Is it something that enhances your reputation or to get business elsewhere? Though from this performance, I wouldn't want to give you a recommendation. But what is it that would actually enhance you to do this for us on time, bearing in mind we've got a problem? And if we were talking to other suppliers where we've got issues and we need help, we would say to them, how can you help us and can you give us a plan? And that's what's been asked for. Come up with a plan. Tell us what it would cost us and help us.
I think I'm probably just repeating myself in terms of I've highlighted what the issues are. In terms of the prioritization, then as I said, we've got a number of audits where we've got.
So what you're saying is we don't want to hear this anymore. We either want to know whether you can help us or you can't. Can you help us? Simple answer: yes or no.
I've outlined to you already that we'll be coming in to do the audit, and we'll be looking to do the audit at the times that we can resource it. I understand that it's in hearing that message, it's something which you're not pleased with, but that's when we'll be coming in to do the audit.
Well, this rather reminds me of a police no comment interview. We must be able to move forward from here. We must be able to negotiate something given our difficulties and your purported difficulties. There must be a compromise somewhere. There must be something we can do to get a result, please.
Following on from today, I will meet with officers to discuss the timetable. What I can't do is promise you, and I don't want to promise something to you that I can't deliver. So I'll meet with officers in terms of discussing the timetable, but I can't say that the timetable will be able to be brought forward significantly to address some of the issues that you've raised.
Hassan, Gareth, it would be really welcome if you can come and have that chat with us. That's the first time I've heard about a Q4 audit. You'll recognise the feeling from the committee, and from a very operational perspective, as I say, 2 audits running concurrently whilst we bring a light rail system under public control in that time frame is leaving us significantly exposed. So if we can work with you to see what the options are, and we'll report back to the committee at the next session about those options that we have explored with you, I think that would be helpful.
Yeah, no, that'd be great.
Okay, so you'll arrange that?
Yeah.
Thank you very much. That feels a bit like progress.
Not quite the word, content's not quite the word I'd use, but I think it's the best we're going to do. I mean,
Well, I didn't say please.
Yeah, EY has 3,000 auditors or something. I know not all public sector, but their junior auditors don't necessarily need to be. So as you say, it must be possible to prioritise it somewhere. We're just not seen as enough of a priority.
I don't think 40-man weeks for that organisation is a lot, is it? No.
Well, we'll have to try and make sure that the next one performs better. Okay, thank you very much. Are we moving on?
I think we should ask them to leave now.
Right. Well, if you could sign off now and leave us, thank you very much.
Thank you, Lim.
Thank you.
Thank you.
Absolute bloody shower. Absolute bloody shower. I'm glad I'm an engineer.
are there any opportunities that we can get external help to bring some pressure on EY to prioritise us? Because I think we're agreed it is just a matter of priority, and 4 to 6 people out of EY's resources just put us at the front of the queue instead of back doesn't seem to me to be too big an ask.
What I'd drived at, and Rhys encapsulated it better, was there must, and from what he said, they must have some sort of plan. We're just not in it so far.
Yeah, I mean, I have heard comments in the past to the extent that they're prioritising those who pay more. And that's not unbelievable, is it?
That's all that drives them, because they're very happy to put the fees up at every opportunity.
And presumably the opportunity cost for us is the extra resource you'd have to get in, if you could find it, Gareth, to be able to do the work simultaneously with bringing in the light rail system.
Yeah, I'm not sure it's such a linear equation that additional resource deals with the problem. That my significant concern is displacement of management focus from the really big issues to managing an audit process, because it will need to be done. But I need all eyes down on the key risks that are in the risk register that you'll see around pulling that light rail system back in and understanding this organisation's interaction with it.
Moving on to item 9, internal audit plan progress report. Emily.
Thank you, Chair.
Thank you. Sorry, I
Thank
was
you.
looking the
So-
wrong way then, Emily.
No, that's okay. Thank you. And sorry I wasn't able to join at the very beginning. I've been in another audit committee this morning. So the progress report, I'm conscious we've got quite a number of papers on the agenda, so I'm going to take them all as read. Progress report, if I could draw your attention to page 3, which shows it's sort of a plan on the page of the year in progress. And as you can see, we've got a column in there for the assurance opinion. There are a number of yellow boxes, which means that you've received significant assurance with some improvement required in those areas. The net zero governance, we've got a partial assurance, and we have 2 reports which are still in progress, integration and AEB, where we haven't formed a conclusion yet on those. So they will feed into your overall head of internal audit opinion. We have a draft on this agenda, and I'll talk you through that when we get to that paper. But it was just to make you aware that we have undertaken that work. Turning to page 4, you can see that we had 2 partial assurance reports from last year that we followed up. We don't officially give an assurance opinion on that, but I thought it was helpful to indicate to you that we haven't seen the progress that we would have hoped, and therefore in terms of us taking that into account, it is feeding in as a partial assurance basis. But again, those are on the agenda, so I'm happy to talk to those in more detail. I'm happy to take any other questions that you have at this stage on this. I'm really sorry, I can't hear you if you're asking me questions.
I'm very sorry. My left arm's weak. Make the effort to push the button. I'm very sorry.
That's okay. Just
Okay. Are there any comments?
I've got one
please.
question, Chair, which is about supply resilience, which was due March 2023. Not started. When are we planning for that to be finished?
I'm really sorry, that is possibly an oversight in terms of the completion of that cell. Let me just double check, because I think supply resilience is actually on this agenda at 10.4, so that needs to be amended. But as you can see, we've got some we've identified that there's still progress that needs to be happened in that area.
Okay, thank you.
just a quickie. You do confirm this, but you're saying that you pretty much finished your days yet, but you've got enough time to finish off on time as I'm reading the report. So just sort of nod your head. Yeah, great. And one quickie. There's a recommendation on the risk management about sufficient resource should be devoted to ensure the risk management framework works. I only highlight it because I've been here on the committee a fairly short time, but there's been a number of comments about having enough management capacity across a range of areas, and that's another one where it comes up. So it's one almost for officers as well as you about making sure that we do have enough capacity to do all these things, which I think has already been alluded to this morning. And this is another area, and corporate governance is another area where we need to make sure we've got enough capacity in.
Yes, I'll let management take the capacity query, but just to say that I was really clear that I was looking at the arrangements which have been in place for the financial year 22-23, and so at this point in time, it's the capacity is there, which is why we've given a significant assurance with some improvement required. I think we're just trying to give that heads up that actually you need to get that sort of capacity maintained and arrangements embedded. But that will be looked at by your internal auditors next year as part of their work.
If I might add just a little bit of flavour to the comments, I think over the last year Cllr has had some support from Liz Morris, who a few of you have probably met over time, and Liz has helped us embed arrangements and supported people in getting to know the system. I think the mainstreaming of all this activity now is a risk in the now that we've dropped off consultancy support, we need the rest of the organisation to be stepping up and mainstreaming this as business as usual. So that's the challenge for us, and that's where we're ongoing with, and making sure that people are taking responsibility for their actions and the administration of the activity within their areas.
Thank you, Chair. So could you comment generally on the net zero governance partial assurance with some improvement required, where the improvement areas are, what you've discovered?
I'm afraid I haven't got that paper in front of me because that was presented to a previous committee and it would have been discussed in detail there. I can find the information if you give me some time after I've presented, and I can come back to you because I can reread the report. But in terms of the report, it did go to a previous audit committee. I don't know if Gareth or Mike, you wish to comment?
Yeah, I think Gareth can.
Yeah, I'll jump in. So it was a really useful report that we commissioned from the internal auditors, and we followed it up to the committee with a presentation from John Dowie and Richard Sully, who's our net zero lead. I think.
Say no more. I remember it now perfectly.
I can sum it up by saying we're doing lots of good stuff, but we're largely doing it in isolation, and we need to wrap it up in a coherent strategy.
Is there anything further?
So are we going through each of these reports in turn, or are we talking about all of them in the round? I'm not clear how we're doing this at the moment.
Sure, you can refer to whatever you want within that.
So Emily, are you going through each of the reports in turn, or are you asking us to question any of those reports now?
I'm happy to take each of them individually. As I say, I'm taking them as read. Okay. I think we have dipped into a question on risk management. If we want to go back to governance, I'm more than happy to.
No, that's fine. It's just the process you're doing it. So I was quite pleased with your risk management report, and one of the things that I'll just bring to the committee's attention, which shows improvement, which is good news for the executive, is the graph in your summary of findings on risk, which is page 131, I think, or 132 of the pack. And last time you looked at this, we were in the bracket or the silo risk defined. You've now moved us up to risk managed. And I remember a comment from Lisa at the time that she said most of the organisations similar to this sit in the risk defined silo rather than the risk managed. So I think that's showing that we've made progress in a very strong way. Would you like to comment on that?
I think you are right in what you've summarised in terms of where the majority of bodies that we look at sit, and then where you're now sitting. And yes, progress. We have seen progress. I think, as I say, we've looked at the specific arrangements in place for 22-23, and we're looking ahead and thinking, will it be sustained? Will it be able to be embedded? So we're just putting that on your radar as something that you need to think about for next year.
Yeah, that's the bit that I wanted to then follow on, because clearly when we had Liz here, Claire, she drove this, and that obviously she's part and parcel of that progress, and we've got to make sure that we don't move backwards. And the question I have for you is, do you think you need a dedicated resource to drive this in the way that Liz used to drive it? Because you're split across a number of different areas, and you can't have that all on your back.
So when we come on to the risk management item at number 13, I've said a little bit more about the approach to managing that through and mapping out a plan for the year in terms of taking on board the recommendations from the internal audit and further embedding and enhancing the framework, and how we do that within the resource that we've got in line with the management approach that's been agreed. So, but there's a little bit more about that in item 13. And I can, the plan, obviously I'll talk about it a little bit more in a bit, but we can bring that to the committee to monitor that as we go forward. Yeah.
Thank you.
Content with that, you don't want to take that onto this item?
We'll do it at item 13, that's
okay.
fine.
Okay. Content? Yep. Have we covered item 10 or? Item 10.
I'm happy to move on if there's no more questions on that.
Okay, I think there are no more questions. We'll move on to item 10, internal audit reports.
Okay, so do you want me to do 11?
Right. You know, I always lose my way on these things because you've covered effectively 2 items at once, haven't you? Yeah. Yeah.
Yes, just for clarity, there's a progress report, and then there's 4 sort of views, which I think we've taken some questions, but I'm happy to revisit those if anybody has any further questions.
Well, I'll just check that no one has any further questions on either item 9 or 10, progress and reports. Thank you.
The only area we haven't discussed, I think, in the internal risk arena is completing actions, and those completed on time and those that are overdue. So there are some that we are late on, aren't there? In your assessment?
Yes. So this is one of the areas where what we've seen is in our recommendation tracking. You'll see that we've got a number of medium risk recommendations which are in not yet due, but what we've and we accept that some of the areas the actions to complete those is not yet complete for various reasons. I know that there's almost an order that some recommendations are delivered in terms of if some things haven't been done at the start, then you can't move on to others. So as soon as you start to get slippage, sometimes that has a knock-on effect with others, and we are working with management to refresh those dates. So the recommendation tracker shows not yet due. However, when we've come to our draft head of internal audit opinion, we have actually itemized or singled out in a column those where the dates have moved, just to show the level of risk that the authority is continuing to hold. So when we see a potential weakness and we raise a recommendation, management agree it will be implemented by a particular date. Every time that date is pushed out, you're accepting that you're going to hold that risk for a little bit longer, and so it's just bringing that to your attention.
Okay, I feel that we've gone on to item 11 now.
Yeah, you have actually. My fault.
It is.
Yes, that's why I was discussing whether we were doing it in the round. You know, I'm a bit confused on it myself.
When I said yes, we're doing it in the round, we're taking the papers as read. I meant that item.
I see. My mistake.
Not the whole agenda. However, there we go. Is there anything further to be said on either item 10 or 11, Emily? Oh, sorry. Yeah. have you concluded your input on items 10 and 11, Emily?
Yes, I have. The only one I haven't talked you through is the Head of Internal Audit draft opinion, which is item 12.
Okay, well, we'll move on to item 12. I like to take these things in order, you see, if possible.
No, that's fine.
It's not your fault. Absolutely not your fault. Thank you very much for being ordered. Okay, item 12.
Okay, thank you. So just to say, this is draft. As I said at the start, we still have 2 reports which on AEB and integration, which we are still to conclude. So that will need to be fed in. But we did think it was important to share this with you because it gives a clear indication of our thinking at this stage. So if I can take you to page 7 of the report, you will see it's almost a replica of the diagram that you saw in the progress report, but we just show where you've got your significant assurance with some improvement required and where you've got your partial assurances. I think it's worthy to note that there are certain core areas where we have to undertake work as your internal auditors to comply with the internal audit standards, and that includes work on your core financial controls, work on risk management, governance, and there's also an IT element which this year we've deemed to be GDPR. And as you can see, for all of those, you have received significant assurance with some improvement required. I think there's also an element of management using internal audit in an appropriate way because they are directing us to areas where there is a level of uncertainty around potentially new arrangements in place or something that's cropped up and they want us to have a look at it. So in some ways you would expect us to be directed to areas where there were potential weaknesses so that we can be used in the right way to flush those out and create recommendations. The way this feeds into your Head of Internal Audit opinion, if you move to page 10, you will see in the bottom right hand corner that we have a triangle which shows the different elements of how we build up our Head of Internal Audit opinion. And as you can see, for risk management and governance, that reflects the work that we've undertaken, the arrangements that we have seen in place in 22-23, and both of those are yellow. I think at the moment we have assessed the implementation of agreed audit actions as orange because, as I said, we've had some pushing out of dates and some slippage on delivery there. And internal control at the moment we have deemed to be partial assurance, so orange, again because if you look at where we have seen the medium risk recommendations that we've raised in year, these have generally been around internal controls. So overall, you've sort of got quite a split. We're still dependent upon the outcomes from AEB and integration, as I said, but we are at the moment feeling that you are still sitting within the significant assurance with some improvement required assessment, assurance rating. So we're more than happy to keep this in draft, and then we will refresh it and discuss it with management as we start to conclude and come towards the end. But this is a good position for you, and this will also feed into your annual governance statement, which you'll be preparing as part of your accounts. So we're trying to be as transparent and helpful for you completing that so that everything lines up for you.
I think we welcome that approach, and that would be a nice approach from other parties.
Thank you, Amy. I mean, the chair has just picked up my first point. We should say it's good to see that some part of the audit process is delivering stuff on time. So thank you for that. We are grateful. And almost just to repeat an earlier question I had, page 192, your little page 10. I'll quote, we have also noted that a key theme emerging from our reviews is lack of capacity and resource across the authority. Workforce has been identified as a key risk by the authority and is being monitored. So this just picks up my narrower question early on about the capacity. Are we happy that we're going to be able to address that, particularly since we've got an awful lot to do, as we've already said, in the coming year?
It's been a key organisational challenge throughout the financial year. There's been points at which the organisation has been about 30% under establishment, and that inevitably has consequences. We've found it incredibly difficult to recruit people into professional services positions. So some of the items that are on the tracker as being shown are overdue relate to the asset management strategy. We lost our head of assets mid-year, got poached to go somewhere else, and a significant salary increase it's took us about 6 months to replace it, and that just means that we've had to reprioritise that team onto just doing the day job rather than some of the heads-up thinking that were identified in the audit in which we accepted. But the same issue around supplier resilience. We've lost individuals within the organisation. We've had to restructure teams to accommodate, and that's meant that we're behind on some of the actions. So it is completely recognised. I think national government have just set a budget for the UK that's focused on increasing the labour market. So this is an issue that's rippling across everything that we're seeing. I think we have got some green shoots coming through now. So we've got a new HR director who's been in post now a month and a half, I think. We've got new and more resource into the HR team to help with recruitment because we've got such a backlog. And we're working on our retention packages. So the world has moved on post-COVID. We need to look at our retention and what we need to do to compete with the wider labour market now. So I think you're right, Dave, to flag this. It's very much on my agenda, and we're doing what we can to address it.
It's this arm, it'll not work. That is a factor. It's this brain that won't work as well. Okay, we'll start again. Thank you very much, Emily. Item 12.
Thank you, Chair. Thank you. Do you want me to stay for the rest of the meeting, or would you like me to drop off?
As soon as I learn to press this button, I'll confirm that you're very welcome to stay if you wish, but you can leave as well.
Thank you. Thank you.
Thank you very much. Bye-bye.
Thank you. Bye.
Okay. Have we done item 13? I knew that. I knew that. I've only been away 3 months. Okay, annual internal audit report. No, it's not, is it? Just testing you there. Well, I clicked and it didn't come up. Sorry.
Often the case.
For some reason. There we are. Okay, risk management. Can you give the other one as well?
Thank you, Chair. It's okay. So just to clarify then, item 13, risk management monitoring report. Yep. So there's just 3 key points really to note from this paper, and that's around the enhancements to the system that we've made, the IT system, that have been made to improve the user experience so that users and risk managers within the business can update and review their risks and actions really quickly and efficiently. So that seems to be have made an impact on that. We've tightened up the reporting timetable and introduced a timetable for locking down the system at quarterly points so that we can then extract the reports that go into executive management team and then come up to audit committee. So we've got a clear timetable for that now that drives the reviews that everybody needs to do. And then, as I mentioned before, I've started to pull a plan together now for the coming year in like a bit of a project plan format to map out that ongoing support for risk management activity, so the regular stuff, the system maintenance, the ongoing training, and then enhancements that have been identified by internal audit that we should make to continue to drive that maturity level, and to do that within the approach that the executive team have agreed, so that and that being the risk management approach is quite distributed, and that risk is managed at the right level within the organisation, but with sufficient oversight, which is identified through the framework document, and to do that within the resource that we've got, and that's something that once I've plotted that plan out, I'll validate with Gareth and Steve Davenport, etc., and I can bring that and share that with the committee, and we can monitor the progress of that as we go through the year to to give that assurance that we are making that progress and sticking to the timetable. So, oh sorry, shall I carry on about the appendices? Yeah, so there's just one appendix, that's the dashboard report. It's in the same format as we brought in January. The one thing that I feel at the minute needs developing is there's a lack of comparative or trend data in there. And I think that's highlighted in the internal audit report as well about that comparative data. So I am aware of that, and it is something that I'm going to build into the plan to be able to do that and work within the system to try and bring that through. So next time we come in June, hopefully there'll be a bit of trend data in there so that you can see that, and I'll try and work out I can do that in graphical or representation as well to make it easy to see. Okay.
Thanks very much, Claire. There are four sort of red risks on this. One's net zero, which we've discussed. There's one on the bus network where one of the key things is securing funding, which you mentioned we've now secured funding up to the end of 23. I was going to ask a question, do we know the position for 23-24? June 23. No, sorry, yeah, June 23. So do we have clarity on position beyond there? And similarly on tram services, anything we need to update it on that? And finally on the airport closure, is anything we need to update it on that?
I can help in this in the sense that I've got the next slot, which is on operational risk, and I will cover bus and I'll cover.
Can we ask the officer to address that, and then you can come in?
Actually, I was going to defer to Tim and Gareth on the detail of the risk.
That's your prerogative, but I don't want people talking across each other.
Okay, that's fine.
Shall I, if I can start us off on the bus funding risk. So members may be aware that DfT have been providing bus recovery grant funding and COVID support funding now for some period of time, since April of 2020 in fact. That's been subject to almost too numerous frequent renewals, 3 and 6 month extensions, and that's been taking place now since COVID began. The most recent extension which we've seen was an extension, again very late in the day, from the department through consultation with Treasury, which has moved the end date of that funding from the 31st of March through to the 30th of June, so just a 3-month extension. Even prior to that, though, the MCA had taken a decision when the last deadline loomed, which was for the 5th of October, to supplement our tender services budget through the use of a protection of priority services reserve, which would supplement our normal tender services budget and provide some protection to the network, and that was for £7.2 million. Our anticipation at the time was that we'd be spending the bulk of that when BRG ended at the end of March. Because of the extension, our drawdown on that reserve is going to be fairly significantly less than we anticipated, and we've been going through a process of engagement with both with officers in local authorities and the leaders in terms of what we do in terms of recycling the use of that reserve for better protection of services. We're still working on a plan to deliver a network change on bus services from the end of July, which was the original plan determined back in August, September of last year. Even if DfT then do ultimately decide to extend funding. There still remains significant uncertainty as to what DfT plans are long term. We understand that there may be a decision on that before the end of this calendar month, tied into Treasury processes that are required of the department. There are talks and considerations of combining bus services operator grant, i.e. fuel subsidy grant that bus operators currently receive, with a longer term replacement for BRG, effectively combining those two funds in some form and putting in place a multi-year funding settlement. But that just remains, verbal and subject to change, as is often the case in these things. So we're hopeful that there will be a longer term funding settlement put in place, because it certainly doesn't do the bus sector any good to have short term funding extensions. They can't plan in terms of their resourcing and their operational plans either. It doesn't help us in terms of some of the management capacity within the MCA more generally, in terms of having to deal with these issues as well. So we're all wanting a more medium term and sustained and sustainable solution to this issue that we face. I don't know if you want to add any more, Gareth, to that.
I guess for the committee, it still feels, for me, from a budget perspective, that we're still very much in reactive mode. So government is still pumping out very short-term funding settlements that just leap us forward a couple of months, and then we have to go again and say what next. So we've done what we can with the resource that is within our gift to come up with what we thought was a sensible medium-term strategy. Government have changed the goalposts, and we're still not sure what they intend to do longer term. So it would be really helpful for our financial planning and for our resource planning, as Tim suggests, to just have a clear, settled view out of government about what the next year and beyond looks like, and then we can react accordingly. But short-termism, whilst it's welcome in terms of getting some funding, just does nothing for our longer-term picture and becomes less and less efficient.
Is it at all likely we'll get a settled view anytime soon? Do you think?
We're hopeful. Again, we've been assured by Urban Transport Group, who do an awful lot of engagement with government, and through DFT officials, that they're pushing Treasury for a settled and longer term solution. And again, potentially as early as the next week and a half. But we will await with interest. DFT tend to make these decisions very late in the day, as we've seen from previous experience.
What's the value of the 3-month funding, Gareth, roughly?
It's difficult. So to us, we receive circa 1.8 additional funding direct from DFT. What operators are paid direct through the bus recovery grant, we've asked, and they refuse to tell us. In fact, they won't tell us. But it's certainly in terms of where we believe, in terms of the amount of savings we made of the 7.2 million, which we assume to be almost fully exhausted by the end of July, we're forecasting 4.54 million of that to be left for us to redeploy.
Would it help, Chair, if I do my item, which is the last item 14, which is the review of the transport risks that we did on Monday, so that can answer some of the questions that David's pulled up, particularly on, and then we can go back to Claire with the rest of the risks.
What did David had his indicated?
I was only going to say thank you for that, and say I know we're going to cover tram next. Was there anything on the airport that you wanted to say at all?
I have to say as chair that if we keep jumping about from item to item, I get completely lost. I don't know if everybody else does, but I'm an ordinary kind of guy, and I like to keep to an order, so we'll do that. Now then, have we finished that item? Yes.
Can I just ask one question of Claire, please, Chair? I personally think it's good that you're putting the responsibility for managing the risks with management and not elevating it to a corporate board, because what I've found in the past is the board ends up owning the problem instead of the management, who've got the resource, hopefully, and have got the responsibility to manage it. So I personally think that's the right move to make. Can I ask, what is the reaction, the view of the inputters to the risk management system? Do they see it as a quarterly chore we have to do, or are some of them actually using it as part of their regular management meetings to manage risks?
Yes, they are. Simply, yes, it's becoming more embedded. But for example, Gareth's whole team meeting, directorate meeting, the risks go each time. So users are encouraged to review and monitor those before they go. They get a reminder on a monthly basis to go in and use the system and update risks. And then obviously there's that quarterly hard deadline, because that's when they go up to the executive board and they receive, in effect, the report that you've got, and then it goes through a kind of assurance process at that level before it then evolves into the one that you've got before you. So yes, I do think that's starting to happen. It's probably a little bit patchy, but obviously the plan that I've got for this year will kind of work out a way of supporting people to encourage that behaviour a bit more and make sure they've got the right tools to be able to use the system effectively. So that's all part of this next year kind of maturity journey.
Thank you, that's very encouraging.
I think just to follow on slightly, some of the stuff that's making a change in terms of people embedding this into day-to-day life is some of the infographics that the system can pop out now, that nice colourful things. I think in the past it's been Word document heavy, a little bit dry, but snapshot dashboard information is starting to bring it to life in a way that we've not had before, so that's certainly helpful for me. Sorry, just to close off the item, Dave, you asked about the airport, so just to keep the committee aware, this is flashing red on our risk register. There are still conversations ongoing between Peel and Doncaster Council with the MCA involved at an appropriate level. There is still investor interest that is out there, and we're aware that the Doncaster are also considering options around compulsory purchase orders. So there is an awful lot of activity that is happening still, but there is nothing firm to update at this point. And just on heightened cybersecurity threat, just to keep you up to date on that. So we received Cyber Essentials in the current financial year, and we're going through a process right now around Cyber Essentials Plus, which is the next level up. So the IT team are putting in a really big shift to try and improve on how we manage that risk in particular.
Anything further on that item? Content? Thank you very much. And next on is Rhys. Please.
Yeah, I mean, it might help you, Chair, that if this section is probably the first section addressed when you come to risks, then you're not sort of doubling up on the key risks as we discuss them, because I think that will make that easier. So I was just trying to interject earlier to help with that point.
That's for the officers to organise.
Yeah. And I would say that in terms of the risk process that's now there and the dashboard that we've got, it's very important to reinforce Paul's point that it's not for the committee's benefit, it's for the executive to use. I mean, the committee needs to be assured that you've got a risk management process, that it's working, that your risks are mitigated, and that they're identified. And I think we're now very comfortable with that. But this process is a good process, and it should be used by the executive accordingly, and I'm pretty sure it is. So we met on Monday. We highlighted 4 key risk areas that were of particular attention. Bus, which to all intents and purposes we now discussed. Tram, which I'll go through in terms of 3 elements. Out of that, a separate one, Barnard Road, which I do want to spend some time on, because this is something that the committee needs to get its head round. And we also talked about the airport, and I won't repeat on that. So just briefly on bus, one thing that wasn't mentioned earlier was the actual patronage level is probably sitting at around 80%, and I think that's probably where it's going to sit. The funding, yes, end of June. We've now triggered a 3-year, or about to trigger, I think you said July, Tim, you're going to trigger a 3-year enhanced patronage tender. So you're kicking that off irrespective of where you are with regard to funding.
We're in the middle of that process right now, thank you, yeah.
So that will determine, I guess, the appetite that you will get from the operators. And I guess, because we did discuss the fact that they are in there to make money, which of course they are, they don't want to do this at a loss, it will have some impact on service and routes, and you'll just have to see what that is as you come through that process. But there is a risk that there will be some impacts in that area. So let me move on to tram. Tram we looked at in terms of 3 areas. One was work that's needed on infrastructure, overhead gantries, etc. That work is progressing. The second one was to do with the handback of the trams, which, as Gareth's already said, there's a lot of risks that are going to happen in that over the next year. This is due to come across in 2024. Now, in order to resource that and make sure that the MCA has actually got in place the staff that it needs to run that network coming in-house, there's about 12 new positions that I believe are being created. And one of the key positions is to have a transition executive. So someone who's had experience of transiting from one body to another. That person, I'm pleased to report, is now on board, and is definitely skilled. And I think out of the 12 people that we're looking to bring on board, we've now recruited 8. So this is one area actually where I think they're well underway in terms of beefing up their resources. There are a number of risks within the handback. There's not just the risk of running the tram network under a new guise, but there's also the condition of the trams coming back, the maintenance regimes that run with it, the safety case that goes with it, and these are all outlined in the risk register, and they have a handle on how to manage that as I understand it. But it will need close scrutiny from the committee going forward. The next thing we looked at, the third thing, was the age and condition of the fleet. Now the trams, apart from the new ones they've got, the trams are basically in the 25 to 30 year old bracket. Life of rolling stock is roughly about 30 years and usually includes a midlife refurbishment within that. If these trams are to be continued in their present guide, what we did learn, and this is new and I suggested is on the risk register, is that they've only got another 10 years life even if they are refurbished or renewed. And that is due to 2 reasons. One is obsolescence, because there are elements within the tram network which are old and can't be replaced. And second, because of the cost of doing the enhancements and the reliability of the trams goes up to the point at which you might as well buy another tram. So that's a 10-year horizon. There's 100 million that's available now to go towards this work, but clearly there will have to be a decision that's got to be made over the next very short term as to where they go with the tram network. So that's the significant risk in terms of the timescales and the refurbishment. So then let me move on to Barnard Road and then I'll close on this. Barnard Road is an interchange between tram and road network, and it's a disaster site for accident looking to happen. There's been a number of close calls. Precursors are saying that this is going to happen. Tim and his team have been trying to escalate this up to chain to get something done about it, and it is very, very slow progress. At the last meeting we said, was there anything that the committee could do to escalate this and enhance the process? And I think the committee really has got to decide how it's going to tackle key risks that comes onto its table, that it has to move forward and make sure things are done about. The last thing you want is another Croydon tram situation where a tram gets derailed and you have potential fatalities. Now, I'm not saying that's necessarily going to happen, but it could happen. And when you see escalators which tell you that there are near misses, that normally means that eventually you will have a major accident. So this has to be flagged up somehow, and some action has to be done. So that's the point at which I will conclude, Chair, in terms of the operational risks.
Would I be right in assuming that part of the responsibility for escalation and action would be with the Highways Authority?
Yeah, correct, Chair, yeah. And just if I could just add a couple more points in respect of Rhys's update, which was helpful. On Bernard Road, it is the single most frequent place for near misses on the network. We had a very significant collision there, people may recall, as a skip lorry crashed into the side of the tram in June of 2021, derailed the front unit of the tram, caused a number of injuries to people on board the vehicle, but thankfully all relatively minor. Some minor mitigations have been done at the junction since then, but only really in terms of clearance of vegetation and nothing in terms of the signalling or movement of vehicles through that junction since that significant incident took place. We've written to Sheffield Council as their responsibilities of the Highway Authority in this regard. A survey has been done, some potential options have been prepared, but as to Rhys's point, we're now approaching, well, it'll be nearly 2 years since that significant incident without any significant mitigations taking place at that junction, which just is a cause for concern should there be potentially worst case scenario fatalities as a result of a further collision at that location.
Can I ask further to my thing about the Highways Authority? I assume that would be a major resourcing issue for the Highways Authority?
I expect one of their challenges is resourcing, because this is just one of many issues on their general network. But we want them to recognise that the nature of a collision between a tram and other road users is much more significant than a collision between two vehicles. And again, we've highlighted that in our note from the exec director to Sheffield recently.
Just following on from your point, Chair, where does this sit in Sheffield City Council's priority list of dangerous junctions that needs addressing?
That'd have to be a question to Sheffield, to be honest. That's not something they've disclosed to us. So I'd suggest we might want to ask that question of them.
I'd very much agree with that. They should have done some sort of risk assessment. There should be, well, I think they have got some sort of scoring mechanism, and we need to understand that the risks that Rhys has outlined are properly reflected in that assessment.
Following our last discussion, I did email their head of service and minor, whether it made any difference or not. I was slightly pleased that it seemed to have progressed a little bit following our last meeting. I will, following today, I said I would email the chief exec, because Kate's been emailed about it, I think, before. It's just come into my brain. There must have been a real accident investigation then. It must have been, you know, that collision and near misses are reportable incidents.
Yeah, it was reported.
So
yeah.
there must be an interim report and a final report.
I'll go away and
with
check
recommendations.
on that, Chair.
Yeah,
I
which would be a good thing to send out. I mean, I can. So occasionally, I do look at the accident reports from a preserved railway point of view, but yeah. So I mean, there must be an incident there, and it would have been very remiss indeed not to have reported it. A collision.
It was reported.
Yeah.
I don't recall off the top of my head what response from RAIB was in respect of the
exactly.
incident. But you're right, it was a reportable incident that was reported.
So if somebody's got it really easily to hand,
yeah,
that'd be a good thing for me to attach. And I mean, I will take it up. You are right, Chair. I said on Monday, basically the highways team, which is about to get further depleted to the benefit of Rotherham, it's really focused on delivering national schemes with time limits and pressure from government, from DFT and Treasury to get the money spent. And we've had this discussion about getting people in to do the work that's required.
Yeah,
but it's, you know, in all of that, to some extent, I recognise you're saying to yourselves, this looks serious, but nothing's happened yet.
Well, it seems it's a serious issue for both authorities, for the Highways Authority.
And of course, we could write as a committee and you could drop a line.
I mean,
which would help.
There is a possible way of tackling this, and this is to go through the regulator, because the regulator has responsibility both for rail and for road now. So there is a way of joining the two parties up. I mean, if you get this to Ian Prosser, who's the Magistrates Inspectors of Railways and also responsible for health and safety, he would personally have to take an interest. So there must be escalation routes, but I'm not sure it should necessarily come from this committee. But if Sheffield are having problems tackling things with the Highways Agency, that is one route they could go. They could go to the regulator.
I suspect Sheffield are having difficulties, as vaguely outlined by Ian there, vis-a-vis resources, priorities.
Do we need, you know, given that we're worried this is stuck, as a minimum, a report back to the next committee just to tell us what's happening, and then we can work out whether we can keep pushing further on this and whether Ian's action has worked or anything else.
I think that's eminently sensible. So I think if we could propose a few actions, one would be for the committee to ask for me to write and to meet with the exec director in Sheffield, and I'll try and progress this. A second, that we put this onto the risk register in a more meaningful way, given that the committee's reflected this as significant, and that will get it attention at our exec leadership board, because I'll be reporting it at that point. And then third, for a report to come back to the committee that sets this out in a coherent way, and then explains what actions have been taken on the back of this, and we can update you then. So we keep focus on it on the main agenda.
Yeah, and then perhaps after that, if that doesn't work, then we copy things to the regulator.
Okay. Yep.
That'd be. Give people an opportunity, a final opportunity, perhaps.
Sorry, just one other question, Chair. Rhys, I think you mentioned that there was 100 million available. What's the source of that funding? Is that?
Yeah, no, so just point of clarification, so that 100 million is an allocation within the CRSTS funding package from DFT. 565, I'm doing the number off the top of my head in terms of total allocation for the city region. How much? 570. Yeah. Wasn't too far off. And that 100 million is not purely for the purposes of fleet renewal or fleet refurbishment, it's for total asset activity, and obviously it doesn't cover the full cost of asset renewal. It's much more significant, the total cost for renewing the entire system, than that 100 million.
Did the working group consider anything on that area?
No, because I mean, yeah, the cost of new trams. So it's a significant sum, but it's relatively insignificant in terms of the overall need, I think.
When we last did a full cost estimate of fleet renewal, it was already at 110 million, and that was pre-COVID. So that's, that gives you an indication of the scale of purchasing 28 new trams.
If I could just follow up on all this, so the MCA has adopted what we think is a relatively pragmatic approach to super tram renewals, which was to go through a modular approach to funding. So we'd do chunks of investment over time rather than one big bang, and that's partly learning. So we've reached this precipice now where there is an awful lot of work to be done, because 20 years ago when we last did this activity, we did it all at once and then didn't carry on investing back into the system as we probably should on an ongoing basis. So the modular approach was that we try and invest £100 million over the next 5 years into track and shuttles and all sorts of infrastructure around the renewals, and then we go back again in the next 5-year period for a more sustained set of investment, and we just keep repeating this into the future. And government funding streams may look different over time, but the requirement for investment shouldn't go away, and we shouldn't ignore it. But it's just to let you know that in the last budget round, government announced a second round of what they call the City Region Sustainable Transport Settlement, CRSTS. So Mike just referred to £570 million that the region received through the first funding round. There'll be another £4 billion in the pot now for the second funding round, and that represents 10 years of sustained transport investment through the MCA, and that's the sort of length of funding settlement that we've never had in any of our spheres of activity. So it does start to give us that chance to look at a really quite long-term funding strategy for the tram.
I mean, the one thing that I can add to that, Gareth, and it's recognised that, I mean, this is almost a global thing, that tram networks don't tend to make money in terms of being self-funded just by patronage. They have to be subsidised in some way. So I'm sure that will come into your thinking in terms of how that is done.
Yeah, it petrifies me, to be honest. But, yeah.
I'm sorry about that, but it's true.
were saying you were that not finished. Oh, I see. I was talking quietly so nobody could hear me. Okay, well that brings me to the end of that part of the agenda, and I think it's lunchtime now. Unless anybody has anything further, I don't think you do. Okay, thank you very much.